This video is on how to read price action part 1. This video is covering the very early basics on how to read price action for people completely new to price action or just new to trading in general. I don't want to waste your time, so I won't yap much, so let's get right into it. For price action, I want to quickly mention that price action is price action no matter the name. You'll have 10 different creators with different names when it's all the same concepts. And then people will argue over who's right when it's all the same. How to read a candlestick chart. Quickly, for newer traders, if you've never seen this chart before, let's quickly touch on the high, low, open, close of a candle to understand how to read a candlestick chart. So on a green candle here, or the bullish candle, it can be any color. The bottom of the rectangle is the open. The top of the rectangle is the close of the candle. The highest line coming out of the top is the wick, and it's the highest point price was in that time period. And the lowest point is the lowest point the price was during that time period. And we can go and look for the red candle, aka the bearish one, any color. Once again, the open is instead at the top of the rectangle, and the close is at the bottom, so the reverse. And the highest point is just like the bull candle at the top. So the highest point the price was in that time period, and the low is the same. So here's a quick example. On the running clock, a new 5-minute period just started. It is 1 p.m. At the start of this 5-minute period, the stock is at $1.20. It fluctuates down, and the lowest point it goes during the whole 5-minute period, temporarily turning into a red candle, it hits $1. Then it shoots up $2 right before the next 5-minute period starts at 1:05 p.m. It fluctuates down 20 cents, and the price ends at $1.80. Without gaps, which I will touch on in a later video. That means the open of the next candle will be at $1.80, usually matching up. That is how a candlestick works. In between the open and the close of a candle, think of each candle as a battle between buyers and sellers. You don't necessarily know the reasoning yet behind the battles and why one side won and the other lost. Your job right now is to pay attention to what is happening during the battle, and for this part of the video, we'll talk about why candles look the way they do and get a more deep and detailed look behind each candle. Here's a chart I picked out. I chose a few 5-minute candles, and we're going to look into what's happening for each. I will just use the most basic terminology universal across the internet. So the name of the first candle we're going to be doing is the doji candle. It's at 10:55 Eastern Standard Time. The second candle is a big red candle closing on its low, and then the next one's a big green one overtaking the red one and closing on its high, so from 11 to 11:05 p.m. for both candles. And then here at 12:20 we have a bull hammer with a bare body. Even though it's a red candle, it's a sign that buyers have come in, and depending on the context can be a sign that the price might start going up. And then finally a massive green candle with a decent sized wick at the bottom. Let's take a closer look at each candle. So I'm going to go down to the 1-minute time frame, meaning each 5-minute candle has 5 1-minute candles. And we'll see how it performs when we get a closer look and see what's happening to make the shape of the candle. So first we're looking at the doji. So that means an almost equal amount of buyers and sellers. So we can see it opened on the left over here, started going up. Then we got a doji again, and then a red bar, bringing us back down. And then finally, a green bar, taking up all the sellers here and bringing us back to the open, making us pretty much equal to where we started. And that makes a doji. We pretty much end up where we started. Next candle here, we have a big red candle that closed near its low. We can see here, it's pretty self-explanatory. We had a big bare body candle. At the beginning, there were some buyers that came in, but they got sold off. The sellers got the confirmation they needed, sold off even more. We had a bit of buyers come in here, taking their turn, taking their shot, seeing if they can get some movement going. But right after the next candle turned green, an even bigger red candle overtook it at the end. Buyers once again tried to give it a shot, pushing the price back up, and then the sellers overtake and brought it all the way to the ground, where the candle closed and the 5-minute period ended. We'll see that the sellers won this battle and destroyed the buyers. Next one here, we have a visual of the next candle, which was a big green candle closing on its high. We can see at the beginning, everyone thought there would be some follow through because the sellers came in, but then the buyers realized this was a price they would like to buy for whatever reason, and they entered. They brought the price all the way back up to the open and even more. Next candle, boom, straight up. Buyers are strong, and an even bigger candle, completely overtaking. Little bit of sellers came in, maybe some profit taking, and then buyers got another entry and took right back off. Then we have here a bull hammer with a bear body. So we can see here the sellers came in hard. Boom, tank, tank, tank. Then the candle opened, sellers gave it a shot again and tanked. And then the buyers were happy with this price, and for whatever reason, support or resistance, which we'll talk about later, came in and shot the price straight back up, and even then some. Sellers came to challenge that. Buyers came, fought back with an equal response, and then they took over completely here at the end and dominated the last couple minutes of the 5-minute candle. And we can see here, for whatever reason, the sellers are so strong and they were winning the battle. But just at the end, the buyers came in and took off. And finally, let's look at a massive green candle here with a sizable wick at the bottom. So right away, it became a bear candle. So at first, it was red for sure. We see it was a pretty big bear candle. Then we can even go back to the same type of candle we saw last time, which is a bull hammer with a bear body. Happened on the 1-minute chart here, knowing that the buyers are here and they're buying at that price. So they entered. The bulls are happy with the close of this candle, showing that there are more buyers here, which gave them more confidence to enter more and bigger size. So it shot the price up even more. Digest the gains for a little bit, see if they're happy, see if the sellers are gonna take a swing, and just barely, and they knew they were happy, and they just fully entered, and it shot the candle up. Higher volume too. More buyers and more size here. Now that we took a look at the 1-minute chart and seen how each 5-minute candle formed, let's go back and take a look at the candles we just talked about. So here we have the 10:55 candle right here, which was a doji. We can see how that played out on the 1 minute. Now we can see why it looks the way it does. And we'll see what happens when the sellers come in hot and are eaten right up by the bulls, knowing that there are buyers in that area. And we can see that buyers definitely like this price level, because later, if we look at the bear hammer that we did talk about, we can see that once it entered that area with strong selling pressure, it was bought right up. And that means the buyers were in town. And we could see it had some follow through. So boom, entered this area, buyers bought up, entered the area again, buyers bought up. So we knew that this level there were some buyers. And we could see that after it tested it twice, that kind of fueled some movement. And we got an upward trend and a breakout. So let's talk about support and resistance. You'll find when watching a chart that price is unable to move through a certain price point, just like talked about here, the bottom zone. Thinking to yourself, why can't it get above $100? It keeps going and reversing right after, right? This is due to some sort of support and resistance formed. The most basic type would be horizontal support and resistance. So if we take a look at this chart again, we'll see the price bouncing off this area, being unable to get under it for a sustained amount of time. And then not only that, there's resistance above. Price is unable to get over this area for a sustained period of time. You can see that every time it tries to go above, the sellers sell. Boom, boom, boom. Every time the buyers try to get above, the sellers sell. And then same on the bottom, causing a trading range. It is stuck in this range between support and resistance. You can see it formed after 2 tries and couldn't get through right here. Then it got more significant after 3rd and 4th and even more attempts depending on how detailed you're looking at it, from a candle to candle basis or major high basis. That shows it needed a lot more buyers to be satisfied with the current price of the instrument based on the information that they have. So they knew that they did not want to buy at this price, but they wanted to buy at a lower price. In a later video, I'll talk about fake outs, failures, liquidity grabs, so you can better understand what the price is doing when it looks like it's going to get through resistance, but sweeps right under you, knocks you out of your trade, and then continues in a direction. When you have the market doing something, it is likely to keep continuing what it's doing until there is new information. So don't expect it to break through resistance if it fails time and time again. And you need to expect the first attempts to get through will fail. So do not jump the gun on your entries and try to go against the grain. After price is arriving at resistance or support, it's important to wait and see how buyers and sellers react to the price level. It can just as easily blow through an quote-unquote important level without hesitation. So go watch and look how the candles form around that area. If you see a hammer form when it reaches resistance or support, you know that there are sellers still in that area. If you get a big green bar off support, you know there are still people wanting to buy in that price zone. These levels can be formed by just a single candle. If you see that price is dropping extremely hard and out of nowhere reverses upwards tenfold, that means that there are a lot of buyers willing to pay the price in that spot, which makes it likely for buyers to still be willing to buy next time it revisits that price. Support and resistance can come in many forms, whether it be trend lines, wedges, gaps, triangles, flags, etc. The important thing is to see how price reacts, how the candles react at certain levels, which could be diagonal, horizontal, or vertical, which is a joke. That's the essence of price action. It's really just straight up watching the action of the price and seeing what it's doing, how it's doing it, where it's doing it, and why it's doing it.